It is ETF day. Congratulations, everyone. We made it. We did it. All of this hard work is finally paid off. Couldn't be more excited to talk about that. Oh, and we got a little hot CPI print today. So going to be discussing that as well, what the Fed does next, and much more today on Money Never Sleeps. Thank you for joining us today. As we get going, hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice, so please do all of your own research before making any buys or sells. Kev, we got the approval yesterday after that fake out on Tuesday, which was absolutely hilarious. We got the news yesterday. Our buddy there, he was the deciding vote, right? Gary Gensler, the deciding vote. And now we have the Bitcoin spot ETFs. We saw Bitcoin pump earlier today, getting over 49,000 a coin for a hot second. Big retracement back to 46.5. We've seen alts get carried up with it as well. ETH is having a monster day, up over 2,600. Everything is sunshine and rainbows. It could have been amazing, but we got that CPI print today. So a lot to talk about in a short amount of time. Where do you want to start? You're on mute.
I knew it was. Yeah, let's start with the CPI print, and then we'll go into the ETF stuff because CPI, I think, it's pretty spicy this read, and a lot of people didn't anticipate this. This came in a lot hotter than expectations.
Yeah, much like it was. We were seeing this consistent downtrend, and all of a sudden we get a little spike up, just a little bit, but it's enough to cause some concern that maybe we're not going to get these rate cuts as soon as expected. Now, don't tell that to the people who are running the Fed, the target probabilities, because we're still seeing, via CME that 67% expectation of a rate cut in March. It's off, basically off the table for January, but they're still expecting it for March. And I don't know, man. Like, the Fed's kind of told us that they're willing to hold this higher for longer. And I'm still very comfortable sitting here in my cash positions, earning, 5.5%, 6% via some of these high yield savings accounts that I'm more than happy just to chill and do less this year.
Yeah, I think doing less, obviously, it's going to be our mantra, I think, pretty much for the show, at least until something does happen, and then we can decide whether we want to deploy capital. But right now, really don't want to touch anything. I think there's a lot of greed in the market, and we're seeing a lot of volatility, even though volatility is also getting crushed back and forth, right? But with the Fed, I think they're in a very tricky place, and I've said this for a long time. I think that it's really weird that I'm lining with bulls that we're probably going to see rate cuts sooner than maybe what bears are anticipating, especially after the CPI print. I still think that we are in a pretty deflationary period. We got a pretty hot print this month, but I don't necessarily think that even if inflation does come back, I think we're going to have bigger problems on hand, right? Yield curve has been inverted for over 14 months at this point now. It's one of the longest times it's been inverted in history of inversions without getting a recession, as in one that's recognized. But this is pretty dangerous territory that we're in, right? We know the consumer's tapped out, so if prices do go up, is the demand going to be there to meet it? I don't necessarily think so. That's the same thing what's going on in the Red Sea. If prices and oil and all that continues to be problematic and prices get stickier again, yeah, I think the biggest problem, if anything, is not necessarily what consumers will have to pay. I think the problem is demand's going to be driving down, but at the same time, rates are going to remain at 5.25%, 5.5%. That does not help the bank with 2 months left before the Bank Term Funding Program ends. And also, it doesn't help the banks given that the reverse repos are dropping and the bond market is pretty much pricing in a recession. I will say about 75% pricing in a recession for 2024. So it's a really interesting place where we are right now. This inflation data, I think either way doesn't help, or doesn't help the Fed at all. Even if it came in really cool, maybe markets would have reacted more positively to it. But regardless, that would have been deflation. The economy slowing. Here popping up, we know that the consumer is pretty much tapped out. We saw credit cards are at an all-time high in terms of debt. We also know that we're going to be getting a lot of earnings from how these retailers did in the coming weeks. So that'll give us more insight into seeing, well, if inflation does rise up here, is it going to be last long? Who knows? Probably not.
Probably not. You mentioned oil there, and that's part of the problem with inflation. Excuse me. We're seeing that go up. Price shelter continues to be amazingly high. Apparel went up. Used cars are going, like, all of these things that we thought had maybe bottomed out. They're not, man. Like, maybe it's greed. We saw with Nike that they missed in a big way. Are people like, okay, we got to jack up prices because we know the volume is going to be down, so we need to try to hit these targets? Like, it's a really bad situation we're in, and we're in this like vicious cycle where something's got to give. Something's got to.
I got to point out, do you know who Tom, I think his name's Tom Lee, a Fundstrat. He's the guy with the glasses, and he's just saying these ridiculous
The guy
estimates.
with the glasses in finance, that's how you're going to describe somebody?
Well, he's the guy in the thumbnail for today's episode. That guy. He's
Okay.
yeah, let me pull him up. I think his name's Tom Lee, but he's Tom Lee Fundstrat. As soon as I pull up his image, you're gonna be like, oh, that asshole. At least that's what I say all the time when I see his face. But let me pull up Tom Lee. This dude. You know who he is?
No.
Well, you consider yourself fucking lucky.
Is
But
he a goober? Like, does he just make bad calls all the time?
apparently he made a good call this year, and now everyone fucking thinks that he's right and that Bitcoin's going to $150,000 within the next 12 months. So he's that type of goober. If you want to know what type of person he is, but he said something so fucking stupid to me yesterday on CNBC, and he was saying how earnings, corporations, prices are coming down, so they can't necessarily jack up the prices anymore. So that's probably going to be really bullish for investors like retail and traders and stuff like that.
So they can't. Why can't they?
Exactly. That's what I said. It made no sense. It's like,
What?
He thinks that everything is turning around. He also priced in the recession at 20 to 15%, that there's a possibility that it happens, but most likely it's not going to happen because the Fed pulled off the soft landing. Then we get the fucking data today. But the point is, even if earnings are terrible, that's probably incentive for them to push the price up a little bit because they have to make up all those losses at some point. That's probably the easiest way to put, all the pressure on the consumers, because we know that, say, supply chain is the issue for apparel or whatever, then it's got to go somewhere. It's always going to end up on the consumer. And for him to say that, they can't necessarily raise the prices on some of these goods and that it's going to come down, that's going to definitely help some of these, consumers. And it's going to raise the stock price for a lot of companies because it's going to be bullish for them. I think we're lying to ourselves, J-Web.
That is some kind of spin zone that the mental gymnastics that guy just had to pull off in his head would have won a fucking gold medal. Like, that's ridiculous. We've seen it from these companies over and over again that they will raise prices as long as humanly possible. Chipotle has been doing it for years. They've even put it in their investor letter that they're like, yeah, we'll just keep jacking the prices up because people are going to pay for it. And that's how we're going to make sure that we continue to be on the bottom line. Whatever. Like, the things that people say on TV, this is unbelievable. This, we're just going to keep doing our thing. We're going to do what we got to do to make money and hopefully help some of the people who watch this, if nothing else, provide a little bit of entertainment during this weird ass time in the markets. What else? We also saw, I believe it's Hertz is going to be selling off 20,000 electric vehicles over the course of the next year and a half. So, maybe that'll help with the used car market and prices there, but not a great look when you have, that many EVs that Hertz is like, yeah, no one wants to rent these things. So they got to go.
Yeah, I mean, it's specifically Tesla too, right? Those are the ones that they bought a ton of, if we remember from, I think it was 2021. It was like right at the top of the fucking bull market. And then it's like November 2021. Hertz was buying tons of Teslas, EVs. And now we take a look at what happened with Tesla today because of that. I mean, we're down below 230. We talked about losing that level of support. This is in the 3-day. Let's pull up the 1-day. But let's look at the EMAs. You can see that we're below the 50 and the 200. We said that there was a good chance that we could go below it. We did. Now we want to see if we are able to climb up above it. If we're not, then guess what? We're probably going to get a death cross on Tesla very soon. We're probably going to be looking at that 194 level as a potential bottom or a local bottom before we get any type of rally moving forward. But again, that just shows you that demand is really an issue. And even for Hertz, it's like, yeah, we bought all these vehicles that no one's using. Let's try and get some money for them. And, let's try. And again, I think they're going to reinvest whatever they sell it for gas powered vehicles, which makes more sense. Electric vehicles right now, they're a nice bull market luxury that a lot of people are able to afford. But for the most part, everyday consumers and even Hertz, obviously, they definitely have to charge a premium because some of these are more expensive than some of the other vehicles. It makes no sense for people to be buying these things. Hertz down very little today off of that news, but it was Tesla that got hit harder, and Tesla's been getting hard for a few days now, right? It was all the way at let's see, it closed up here around 240. Now, obviously, 3 days later, it is here at 227, even when as low as about 225. So we're in a really interesting place for Tesla. But again, that kind of shows you that there is demand issues in the EV market. And so I think a lot of these companies and a lot of these car companies that are trying to get into it are probably going to be trying to get out of it if things continue this way, because this might not just be a sign that there is no demand for rentals. There's also probably no demand for people buying these things as well.
Yeah, let's take a look at a few other stocks. We can kind of go quick through them. We'll go to Coinbase in a second. Let's look at Netflix real quick. Up $15 on the day, 3.2% off the back of surpassing 23 million monthly active users on their ad tier. This is a sell the news kind of a situation, in my opinion. Look at that gap that's formed. I mean, that's pretty wild. Maybe it goes a little bit higher, but to me, this is if this is what's driving the move right now, it's not like a material thing of why more people are going to subscribe. It's just a results oriented move. That's a sell, in my opinion. I don't know about you.
Yeah, I've not liked Netflix at all. And again, going into a recession, we're starting to see them raise the prices. And I'm saying recession, obviously, because we're closer to one than we're not. But it seems like they're raising the prices as things are getting harder for Americans. And it doesn't necessarily bode well with a lot of people. I mean, people will still pay for Netflix, no doubt. But for the most part, I think that's definitely going to hurt the amount of new users that they do get. And again, they've been extremely restrictive with how many TVs you can watch on certain accounts. You have to pay for more if you want more than 2 TVs per account and stuff like that. I don't think that's bullish by any means. I think this is also just kind of following the trend of the market since, I mean, obviously it's been up only, but say since October, we can see that Netflix is roughly up, about 42%, 43%. So absolutely stupidly bonkers how much it's been up. But the other thing that I'm keeping an eye on, just looking at this as a technical trader, the top of this, this gap that we formed up here, this would be the highest it can go is around 505. We never touched it back here. So we went about 500. So if we were able to wick up there and close at 505, that would give me, I mean, we went to 503.41 today. It would give me a bit more, serenity. We're looking at, okay, we filled that one gap there. We can probably look at this as one giant ABC corrective pattern, which if you ask me, it's 100% what this is. Let me just pull this up a little bit so you can see it. Make this thicker. Yeah, I mean, it's an ABC pattern. If I see one, right? 5 down, 3 up, 5 down, probably. Let's just pull this up a little bit higher because clearly the price has gone. But I mean, that's a pretty even ABC corrective pattern there. So if this is a sell the news event, we're going to keep an eye on it. But also, if just going back to the Bitcoin ETF, we've seen how that's marked the top often when we get some of these products that are introduced into the market. We do see that there is correlation between TradFi and crypto. So, maybe we're getting to a place where it is getting pretty toppy, pretty frothy. I'm not saying that it is now, but it seems like we got there pretty early at the beginning of the year, and people are definitely have the sentiment on one side as opposed to the other. I wouldn't be surprised if we do start to see some of these corrections post earnings. I would really be interested to see how Netflix earnings do come about, but I'm not necessarily sold on Netflix being a winner beyond, 505 at this point.
All right, let's go to Coinbase.
Let's do it. This one was one I was warning people about for a while. I did not like Coinbase one bit, especially when it was getting up here. And I said, as long as it stayed below this wave one of this 5-wave move, which was roughly around 208. As long as it stayed below 208, we were pretty much golden for a fifth wave coming down, which means we'd go lower than the wave three at around $27 or so. And we're at 141 today. But if we look at where we were earlier today, we were at 151. And if we were watching the pre-market today, we would have known that we were, I think we were all the way up to about 174 or 164 or so. We shot up a good amount in the pre-market. Clearly, we aren't there anymore, but it's dropped significantly today. We're down 6.54%. The win as low is 140.01. Getting close there, guys. I thought that maybe if we got a bounce, it would have been pretty significant, but what we want to see is a 5-wave move within this 5 waves here. So I'm interested in seeing if this is just our wave one, right? We're closing this out. We'll get a wave two bounce, maybe off the 50 moving average. Be very short-lived. Doesn't probably go higher than somewhere in the 160s, 170s if we get there. That's the other thing. We have to see how this plays out, and then we'd probably get a really massive wave three, which would probably take us below 100 for Coinbase, and that's gonna be really interesting to watch here. At the fact that it sold off on the day of the ETF news, and everyone was saying that Coinbase is probably going to be a big winner up here. It seems like it was a sell the news event. I'm not convinced off of what the SEC said that Coinbase is going to be as active as people were maybe anticipating with a lot of these ETFs. I also think that Brian Armstrong's that whole debacle with him possibly stepping down continues to be an issue. And I'm really interested in see if that does come to fruition, because if that does, that could be part of the reason Coinbase just absolutely tumbles, right? Because Coinbase has 3 problems now. It has the ETF, it has Bitcoin's price, and it also has any type of news that could absolutely just hurt it, especially if we're looking at the outlook of how this is going to be impacted going forward with all these other TradFi vehicles pretty much having some type of market with Bitcoin now. So I'm really interested in see how this plays out, see if we do get any bit of a bounce. But I wouldn't be surprised if we're testing that 50 moving average in the near future, which is right here around 134. And if we start closing below it, then obviously, we're testing probably 113, 112. If we lose that, then we're at the 200 EMA, which was probably my main target for wave three, which would be about $98. So that's a significant move from where we were at the beginning of the year. We can see to start the year, we're already down 24%. So Coinbase, not necessarily a big winner in my opinion. And this might be also another sign that we are getting towards a pretty toppy part in the crypto market itself. And this is just a TradFi signal of that.
All right, let's get right into Bitcoin then. We saw the price, like I said, absolutely pump earlier today when the market opened. It has retraced, still sitting at a very healthy 46.7 thousand per coin. So, it's doing well. Like if you zoom out on these time frames, it's had a hell of a run. The question now becomes, is there enough fuel left to drive this thing higher, or have we reached a local top and we're due for a retracement?
I think that $48,000 to $50,000 level is really critical. I think $50,000 is a huge psychological level. I mean, $50,000 Bitcoin, when's the last time you've seen that? Not since the bull market, right? Or at least when they were selling off from the bull market high at 68,000. So seeing that there, I would have anticipated that we already seen the price push up there. We got to 49,000 today, obviously out the first day of this ETF trading. But look how much it's wicked back. And we can pull this up on, say, the hourly. You can see it shot all the way up there, and then it got a bearish engulfing candle instantly. So it's finding some resistance at that $48,000 to $49,000 level. I think we might be trading in here for a period of time, but I do think that we are going to probably see a pretty good dump at some point. And by dump, I mean probably like a $4,000 or $5,000 dump, and then we make another lower high, and then we continue on that trend to the downside. I do think that we are getting really close to a local top in Bitcoin. Again, if I look at this on the daily, and we talk about the 5 waves that we were waiting for, Bitcoin's already put it in. I'm convinced. I'm happy with seeing this, wave 1, wave 2, wave 3, wave 4, and then we put in a higher high for wave 5. That's totally fine by me. The problem, I think, with Bitcoin we want to keep an eye on is it's still relatively within this parallel channel, right? This is one that we've been watching for a long time. It hasn't tested this this bottom of this channel in a long time, but this is something that's been going on since December of 2022. Now here we are in January of 2024, so it's over a year. And we look at the daily stochastic RSI, extremely overbought. Let's look at the weekly. 100 and 100, completely overbought. Look at the monthly. 196 with how green this month has been already. By the time we get to February, there's a good chance that we are going to be extremely overbought on the monthly as well. And I mean, look at this. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of the last, say we'll say 13 or so candles within this range here have been green. They have been green to the upside significantly. I do think that this is pretty close to a top. I'd say 50,000 because I do think that we might get a wick up there as people try to de-risk a lot of this, but I'm not sold on this going up higher than that. I think we would have seen it instantly, and we didn't see it. We saw all the money kind of circulate out of Bitcoin and into alts, and that's kind of the dangerous thing here because that means that we're probably getting towards the top of distribution. We sell a little bit of Bitcoin here. We'll move some of the money into the other ones, sell some of those bags that we have, and then just kind of keep doing that until we get to the point where it's like, okay, we've distributed a pretty good amount. We've came out on top. Let's see where the market goes. And then again, like I said, crypto and TradFi do tend to correlate when we do see these downward turns in the markets. So I'm really interested in seeing if Bitcoin is going to be the leader of that now that there is TradFi exposure.
All right. It's now about ETH and whether, like, I'm starting to see people talk about the ETH ETF, and I'm just like, can we just not, please? Can we not? Like, it took how long to get this Bitcoin one? Like, can we, like, is this really what we're speculating on and what has driven the price of ETH to 2,600 and beyond? Like, it got up to almost 20, hit 2,700 today. It got just below it. Just below
2690.
2690.
Yeah.
So, there's that. We have some of the other alts that have rallied as well. Bitcoin dominance has taken a bit of a hit, back under 53. Where else are you looking in the markets? We got the VIX, tumbled today, which
oh my goodness, I didn't even see that.
Go up, and the VIX is now 12.4. I'm just like, what in God's name is going on here?
So again, that continues to be an issue. They want to crush volatility, but you can't crush volatility forever because you'd end up getting Volmageddon, which is where out of nowhere, one bad piece of news or the market just absolutely turn and the machines have to turn real quick, and you start seeing volume pump into this market where we're seeing stocks and indexes trade faster than they normally would. You'll see the VIX pump like crazy, right? And I'm not talking about a VIX of 15, 20. We're talking about a VIX of shooting up to like 35, even 50 at some levels. I just want to go to February of 2018. Here it is. I know it's 2019 maybe. I think it's 19. February 2019. Let's see if I can find it. Can't find it in this chart. I always mess this up. Maybe it's February 2018.
It's all good.
Yeah, it is right there. There it is. That February 2018, right? Volatility is just so low for such a long period of time. People aren't necessarily getting too excited. They're thinking it's easy money, shorting the VIX, and the next thing you know, well, what happened here? Up at 50, and how many people blew up from that trade? Probably a lot. So seeing and the weird part about the VIX too is that the markets were down significantly today. They just bought it back the closer we got to the end of the day. This was down.
Nvidia over 550, Kevin.
Congrats, Nancy.
Yep, Nancy. Congrats me and Nancy. Don't congratulate her first. I've been on this far longer than she has. I don't want to hear it.
She had the news. Yeah,
just but I had the balls of steel to hold it for this long. Okay. See
right,
these
congrats,
hands?
J-Web.
These are diamond hands. Okay.
Diamond hands. Joe Biden's got diamond hands too. That's such a bad joke. I'm sorry. That's just him walking around stage.
Let's keep it moving. What else? What else we got? I got to get to the chiropractor. Okay. My neck's all fucked up. I got to get to the chiropractor. Don't give me a headache from your shenanigans before I go. Okay.
All right. So the dollar obviously tanked in the past, hour or so. This thing was up so much off the beginning of the day, right? We saw as soon as the CPI data came out, shot up. Obviously, stocks and volatility are being crushed. This is coming back down. This is like the stupidest corner of the entire market right now. It's the VIX, the dollar, and then I'm going to even go back down here to gold. Gold is rallying, I see, inversely to what the dollar is doing, but gold even went down to 2013. We're talking about gold just not being in the move right now. We talk saying that there's probably a good move to the downside. It seems like this wave one is deep because we haven't seen a pretty good push to the upside to indicate that we've been in a wave two yet. So that tells me maybe there's a bit of a rally for gold here, but I want to see how this plays out because if this does just keep getting nasty, then we're talking about smaller waves within a bigger wave. And then that just makes everything a lot more complicated, right? But when I look at gold, I look at the dollar, and I look at the VIX, nothing is necessarily making logical sense given what the market's doing, how much volatility there is, positive, negative, 40 points up, 40 points down. Should be a lot higher than what it is, but it seems like they're crushing it. Makes sense knowing that tomorrow we're going to get the bank earnings. So we're going to take a look at how the banks are doing. We got, I think, who do we got reporting tomorrow? Bank of America. We got BlackRock. We got JP Morgan, Citigroup. I think there's one other one that's also reporting. Let's see. It's
We'll talk about
Bank of New York Mellon. Yeah. But those are the ones that we're going to keep an eye on. Earnings are kicking off already. Some of the smaller companies are already reporting. That's the big day tomorrow. We'll take a look at the weeks ahead tomorrow as well to see how things are going to be
Delta
stacking up.
tomorrow. It's not bank, obviously, but Delta tomorrow as well is going to be an interesting indicator of travel and how people are spending their money there.
Airlines might as well be banks at this point, right? All those credit cards. But nonetheless, we're going to keep an eye on the banks tomorrow. But the last thing I want to take a look at is the yield curve, because the yield curve is very interesting right now, and we're talking about the yield curve reverting back above this blue line here. I'll make this blue line even easier to see. Let's make it red, I guess. Yeah, red's, you can see that from there, and it's at negative 0.33. I think that we are going to see a pretty good push up if the 10-year continues to be, the yields continue to drop at a slower rate than what the 2-year does. 2-year is at negative 2.25% today. It's a big move down for the 2-year. So I have a pretty good feeling that we're probably going to see this 2-year continue to rise. I mean, the 10 to 2-year inversion continue to revert towards zero. We'll see how big it is today once market closes. But I think that that's going to be another interesting part of the market, because sure, inflation's up, but the bond market is definitely pricing in some type of pain ahead. And that's going to be where my eyes are going to be watching, because clearly TradFi and everything like that's a lagging indicator until we find out what's exactly going on. And the last thing taking a look at is the bank term funding program. We're going to get all that data later today to see how much it has increased by. If this thing continues increasing, it has nothing pulling back, I'm just saying watch out. I think this market come March is going to be very complicated, especially if rates remain elevated, and all these vehicles where they can find money to stay liquid and stay operating. We're probably in a world of hurt at that point if that continues to go up leading into that March 11th date. So nothing too crazy. ETFs, we didn't even need to look at any of the ETFs. I mean, if we have to look at one ETF, we'll look at how stupid it was at the open and see how they're doing now, but nothing too crazy. This has been a very boring day, pretty much. They bought it back right at the end. It's boo-hoo. We just wait and see how things turn out in the days to come. Pull up the hourly. Yeah, so I mean, that's the IBIT, that's BlackRock's. That looks like an IPO if I ever saw one. IPO. That's an interesting one there. That's FedEx, I think. That looks like an IPO.
We'll give these a few days to get, a little bit more than just an hour's worth of data.
Yeah, but for the most part, look at that. I mean, that just looks like Coinbase's IPO when it went from 400 to 350, in one of the first few days of trading. So we'll see how it plays out for the next few days, see how Bitcoin reacts. But I mean, this is something that's going to have to die out on its own once the mania stops.
The mania will stop eventually. All right, that is going to wrap it up for today's show. Appreciate everybody for joining us. If you have not yet, once again, hit that like button, subscribe to the channel, drop a comment, let us know what you think, anything you want us to talk about. All of that good stuff is greatly appreciated. We will be back tomorrow to close out the week, a fun one in the markets. We'll get PPI data. We'll have those bank earnings to go through. A lot to talk about. Be safe out there, everybody. Appreciate you, and we will see you tomorrow.
Take care, everyone.